Again, coming in a little late here, short at 32 on an extreme swing trade from a very heavily Federal Reserve rigger jacked up price module here. 32, and the trade has already produced a move down to 2150, and I'm actually targeting a move somewhere into this zone between these thicker yellow lines here. And the big question is now, this is the huge question. Are the riggers going to let them go, let the sellers come back in at that level to disrupt their already big upside rig here? There we go. This is the full extended Fibonacci. Now, the furthest Fibonacci retrace would be right at this yellow line. So actually, this has been helpful putting these fibs on. I usually do that when we do a swing trade because um, just adds a little more clarity to certain levels. And this orange line is kind of like the center of this zone, which I believe they should be able to go to. If they're going to be allowed to drop down there in a full retrace. That's the question. I'm saying allowed to because the Federal Reserve is just taking over the markets basically today. After mid-morning, they just said, well, they keep the sellers keep knocking them down from the opening range, and they were getting angry because they like them above the opening range. That draws in a lot of algorithm systems and everything else. So they just went in there and just blasted it. And so what we're watching for now is see if we can get a dip down, first of all, under the center of the Fibonacci range, cracking that, which we haven't yet. So it's like good luck. I don't know. Good luck. Losing 19. This darker blue line right here at 1450 is the full Fibonacci 6.18 retracement level. So if we get a move down there, hallelujah, I can't imagine that we would even, to be honest with you. And that would be a nice trade from 32. I mean, it represents about 15 points, but this market should be able to plow through both these at least down below 13, and then we'll start watching these two numbers here for a possible exit. I think that's where they could maybe take them. I don't know though. I don't. It just depends if the riggers are going to come back and just scream them back higher again, back up towards above 30, and then try to push them back up again. They might. Yeah, there they go. It's embarrassing, but that's what they do. That's why they're called riggers, at least by me. A lot of others are starting to figure it out, and they're coming back in and saying, oh, yeah, Mohan, he's been saying that since 2001, and now they're just so blatant and obvious that they don't even care. Everybody talks about, oh, the central banks, they call them. The central banks may come in, and anyway, everybody knows now. That's good. It's nice to pioneer things. Back then, I sure used to get a lot of hate mail. They wouldn't do that. Nobody's rigging the markets. Yeah, right. What do they say? And if you believe that, I got a bridge to sell you, some land with a bridge on it. I don't know. Who cares? So look at this. Dipping down just above the center of the fib number here, and guns a-blazing. Here they come again. The good old goofy Fed. Not an American company. I don't know if any of you, most of you should know that by now. If not, go on YouTube and look up History of the Federal Reserve.
Order pending.
All they care about is themselves. Anyway, Let's see if we can blast it back down. Now we got a little bit of a measure to watch here. And today is an academic sort of day. We're not, I would like to say that I believe this trade will work out, but the rigging is so off the charts. We're in the midst of this historical market crash that it started about 2 weeks ago. And we're now, everybody's trying to figure out, is this a bottom? Is this a bottom? Or has there not been full panic capitulation? I'm stuck in the middle. I think Friday might have been at least a really important level 1 or 2 bottom, but I wouldn't be surprised if they go down 1,000 points again on the Dow and we have another real heavy panic capitulation. And I'll be just in there taking off more hedge and adding more stock if that happens. So we're trying to break them down under this last dip low of 20 quarter, smash through this 1950, and ideally give us a ride down to the blue line. We haven't smashed 1950 yet. Under this 13, and somewhere in here is where we start looking for to cover this short here. I'm estimating we should be able to get right in this zone here. I'd still like to think 6,500's in the cards because we've just gone through such a intense overbought position. But let's see if we can blast them through 19, take out this 1450 level, smash through that, and start looking for a covering spot down somewhere around in here. Because with the ranges and everything we got, if we're targeting 6,500 and they only make it to 6,507, that's close enough for rock and roll. Okay, let's see if we can take out 19 and then take out 15 and turn this thing into turn it into a stronger downside move here. They got all the ingredients. There's only one thing missing, and I think you know what that is. We got these insane riggers lurking out there in the shadows ready to ramp up the drops, the dips. Big key number right now, 17. And they're not even seriously taking out 20 yet, or 1950. Let's try it now. Let's see if they can take 1950 out. If we can get some pressure under 1950, they can blast through that. Not just the way they're doing it. They're just dibble-dabbling around it now. That's the problem. That's the Federal Reserve is still trying to prop up that area. If they'll just sit on their hands and we can blast through 1950, we should be able to get a nice move, rolling them back down to that 14 area, I hope. 1950, taking them out with strength. We got to get a blast through there. Let's see if we can do it right in here. The Fed still looks like they're supporting that center of the fib number there. Let's see if we can blast them through 19 or lower on a blast type move. It's got to be a nice hard dive. Take 19 out and put some selling pressure on it. And that's what we want to see here. Put some selling pressure on under 19 and clear out 1775. And if so, we can get a start at least of a trend down move. Feds know my numbers. They have their own, but they're very similar to the ones I'm showing you. So they may come in and just say, are you kidding? We're not letting 19 go. What to speak of 17? And then just jack it up again, goose it back up. We got 10 points so far on the trade, but that's not the point. We're not trying to necessarily, when you get a swing trade like this, you're trying to hold for more or less a specific target type goal as opposed to, ooh, I got 10 points. Yeah, oh, right. that's fine for when we're in a scalp trade and we're targeting, our normal scalps like 4 points or so, or with the modification system I've been using the last few days very successfully until the riggers came in today. Um, we've been scalping 8.5 points, 8.5 to 10, but that's because everything's different since the crash started. Everything's going wild. We were up. I had 40 points of signals on Friday and 39 on Thursday, but the market was flowing in sync. It was in flow with buyers and sellers. Now, who's back in here throwing water on all that. They think they have a right to control the quants and the markets and everything. I didn't vote for it. Wouldn't matter anyway because they're not an American organization. All right. Still watching for a smash through 19. There we go. That's what we want to see. We got to smash them through 19, take out 17, smash 17 down lower without feds coming back in, snapping them back up and rigging them back up here. If we can do this right in this area, we could start a trending down type move. That's where you get that 6,500, 6,505 type action.
Order
But
pending.
that last little crunch down there, that's the question now. Are they going to let that go? Or are they going to come back in, guns a-blazing, and try to rejack it up to 32 again? 30 handle, 32. They're in a trend down mode. They're trying to form a trend down mode right now. Let's see if we can keep that pressure on under 19, and they can trend them down for us, targeting this area right here, 6505 to 6. Again, targeting 6505 to 6 zone on a trend down move. Kind of an academic day. We're trying to just discover how to work these markets um, for the next week. It's kind of taking it day by day, but I think if we can figure out what the riggers are doing, we can trade accordingly without any problem. So let's see what we got here. Still watching to see if we can get a trend down action going here. Under 17. It's not confirmed yet. Not confirmed yet. Staples are going to have strength. Remember, I was recommending, this is a pretty important recommendation here, this VDC. You can buy them right in here. Vanguard Consumer Staples Index Fund pays about, I think, 3% dividend, and it's a basket of consumer staples, which in an environment like we're going to be in, the market I think is going to come rallying back once we catch a bottom, but the staples will do really well because Wall Street will start favoring those in a rebound after this crunch we've had. It should be a very valuable thing to own. Stodgy, yes, but that you're going to want to think stodgy. These a lot of these high flyers will go, but it's not going to be like it has been this last year. The pockets of interest are in the a little bit in the golds. Gold 1327 coming back, possibly the situation over there with Iran and Israel going at it again here. That Alps Medical Trust that I talked about earlier, S-Bio up 2.25. Yeah, here comes the riggers again. They're not letting 17 go, gang. Sorry. It should it should be able to melt. But what you can see before your eyes what's happening. Oops, sorry about that. 17 should have been able to melt down 19 and then 17, and look at right at my 17 number which I gave you earlier. Look at that. See, the Fed's really playing games here. They got a lot of games going on. Another one I like, Starbucks, believe it or not. Good value right now. Starbucks, current price, it's up a little bit, 55, 58, but yeah, in this 55 area, 55 half or lower for long-term hold. Starbucks up 1.83% today. So the golds and the stuff I'm recommending is where the strength is. The silvers, the golds, 10-cent holdings in China. Keep buying that. Let's see if we can smash this market. And we're trending down now, so we're trying to get a trend down move down to 65.05 to 6 area. That's where the pockets of strength are. And watch those consumer staples. That's where you want to be for if we get a 2-quarter rebound, which I'm rather expecting. It's going to be, those are the type of stocks that are going to do well and be a little safer. You want to get those things safer because Wall Street will start searching for safety. If we bottom, or heaven forbid, we have another horrifying second level washout that really freaks people out when it starts rebounding, which I still think it will, um, the consumer staples traditionally will do well in that environment. Okay, still watching for 17 to break. They went 16 quarter, so they're slowly but surely trending down a little bit here. Remember I said trending down is what we're looking for. And then they came in, the Federal Reserve riggers, and re-goosed them to 26. They came back down again, and they're still trying to trend down, but they keep getting fought. They're being fought by the riggers. But I think there could be a selling pile on if they can just break under 17. That's a big if, I know. But right now, the chart pattern is slowly grinding its way into a sell down chart pattern. So I think we got another dip down lower. I'm going to be watching my world famous hyper scalp indicator. Many of you own it and are quite pleased with it, I'm sure why. And I'm also watching the price and volume momentum indicators very carefully right now as we watch to see if they can trend them down. And if we get a hard, fast slam under 17 and they slam them real hard down to like not under 10, 9, 8, whatever, I'll probably just cover up the short just because it's a gift. Here we go. They're trending down as forecast. We're coming right down to the fib number here at 1450. Let's see if we can bust through that, bust through this thick yellow line, get them down near the 10s, down closer to 8, the better. That's what I say. The closer to 8, the better. And see if we can bust them down a little bit under 13 and smoke them down towards the 6 to 8 zone. I'm just trying to estimate because you can't tell exact 6 to 8 zone. Stay ready to cover the short anytime. Oh, I don't want to miss it, but I don't want to give up. Want to hang in there. But doggone it, we might have missed that. They just took them down right to where I said, to the 1075. I'm trying to get them right under 10 in that 6 to 8 zone, 8 to 10 zone, somewhere in there. It's too hard to tell, but that's what I'm trying to target here. And I don't want the riggers to come springing them back, and they might because they just dipping them down here. 1450 is the fib number, breaking under this yellow line at 13. Let's try to cover them up on a hard dip down under 10. If we get it, stay ready to cover them up on a hard dip under 10. A little more pressure. Doggone it. Come on. Hard drive under 10. I'm just going to throw in the towel and cover them up. I want to sell. I want to buy them into a strength on a cover up smash. The next smash lower under 10 that we get, I want to cover them up. Doggone it. Ugh. Next smash lower under 10, cover them up. One more downside pump. We're in a brand new sell down trend. I'm just looking for it to get a little more strength. And where they go from there, I don't really care. Just trying to get 10 here. 10 or
Order
lower to
pending.
smash. Let's smash them under 10 and cover them up. And maybe I'm too late already because they just went to 1050. So I might be too late. The riggers may try to gobble them up here. And we're in a trend down mode. They should be able to go down there. Excuse me. And then maybe they go down under 10. And who knows? And they take them down to 6,500. I don't really care. I'm just trying to make us a decent amount of money. And they just stole away our drop to 10 there. They went 10 half. It's almost like they're listening to us here in the room. It went to 10 half, and now they're re-goosing them. Doggone it. Shoot. Don't mind if I get a little mad here. It's like cage fighting, with these riggers. It's not like a peaceful, mellow thing. It's like you're cage fighting with these people. Okay, we're trying to get them down lower here. Unfortunately, went 10 half. I was saying 10 or lower. They went 10 half. You can see it right here. Under our yellow line at 13, they went 10 half, and that's where they smoked them back up here. Let's try to bust them down back under 13 to 14, hopefully, and then watch for a little dive under that maybe. This still should be trending down here. There shouldn't be any reason for this to be popping back up and going all crazy. So let's see if they can lower them back down under 14 again in a trend down type push. And let's say now 10 half or lower. I'd like to say 10 or lower. I'd like to say 6 or lower or 8, but just stay ready to jump out. We're going to try to smash them down under 10 and cover them up. Smash them under 10 half or lower and cover them up. Next dive lower. There we go. Boom.
Or
We got them
target
10 half
filled.
or lower right there. 9, 9 quarter, 9 quarter, 975. 8, 8. Yeah, that's what we wanted. It's in a trend down mode. Now, look, they might go to 6,500. They might even blow that out. We don't care. We just got them out at 9 quarter. So that's all that matters. 65.09 quarter, and we were short at 32. So great job holding, you guys. Like I said, we don't care where they go from here, but great job holding that swing trade there. That was an extremely overbought deal orchestrated by the riggers, and they're doing a little give back here, and we got them out right on that smash under 10 down to 9 quarter. Great job.